Welcome back to another case study on price. This is June 25th, 2024. As always, these are just my interpretations on price. Shout out ICT. Let's get straight into it. As we can see here, here's the daily chart of NASDAQ. So we just have come into a daily imbalance and we swept out these equal lows. And then we have caused some displacement to the upside, but we kind of have left an equal low. We barely purged previous day low before getting an expansion move today. And ES, if we look at ES, we come down in the same fair value gap that we had, but ES failed to take the previous day low, forming an SMT, and then we had expansion within the market. And let's take a deeper dive. As like I've been saying on ES, I want to see this 4-hour order block be the draw on liquidity. As you see today, we failed to take these lows, leaving failure swings in the market, and then we reprice higher to this 4-hour order block. That's what we end up happening. So this was a fractal on price to where we swept these sides here, rebalanced this imbalance, repriced this imbalance, rebalanced it, and then now we could be heading towards this 4-hour order block. And here is the 1-hour chart on NQ. Most of the annotations I did today are on NQ. I didn't really use ES too much because I didn't really think that they were as correlated. But we did end up forming SMTs at key times that I'm going to bring up throughout this study. So basically, we have just taken those equal lows here, those relative equal lows, pretty nicely. And then we came back down, and then we swept this low, and then now we're displacing higher. So here are the 1-hour annotations. As you can see here, we have two big meaty down close candles after sweeping sell side liquidity here. So as you see, like we barely purged sell side liquidity, but that is just enough for us to frame this move higher, and then we end up coming back down into, I believe, maybe this imbalance. I don't know. I think I used other PDRAs, maybe constant growth rate of this wick. I actually didn't even mark that out. My bad. My apologies. But basically, market opens here. We're accumulating, manipulating into this hourly order block and this hourly imbalance, then we're distributing to buy side. As you see here, like this is right before market open, and this is the market open candle. We manipulate into the order block and the fair value gap. It's probably a little bit more high probable. It's probably more probable that we manipulate lower and then send price higher, since we have these two down close candles that show a nice order block within the market and this fair value gap extra confluence with the order block range. It's more probable that we manipulate into these into this order block and fair value gap rather than manipulate higher into maybe this gap, just because this is more recent, and we've also barely purged sell side, and we do have an SMT at those lows since ES didn't take that. So here is a 15-minute chart, and it's kind of just highlighting that order block. And then also I want to see these new day opening gap. And then the high of the day also kind of is around that new week opening gap. This is a previous new week opening gap, and then this is a current new week opening gap. But as you can see, these new day opening gaps and these new week opening gaps still get referred to. And here we have that consolidation, accumulation, manipulation, distribution here. And then we return to this order block here. We take this buy side liquidity here, and then we retrace back to where this order block right here, or this order block. I would refer to this as my order block. This is kind of like the propulsion block. We return back down in there, and then we end up having another buy model throughout the rest of the day, as well as sweeping liquidity here. All right, and here is an SMT that we formed in the market right there. ES, kind of just slower action on ES, not as high probability. We're leaving failure swings in the market for an SMT, and then we are still distributing higher. And here's that SMT marked on ES or on NQ, and then that's the order block that I'm referring to here. All right, and here we have a 5-minute chart, and I'm just noting the buy side that we end up taking, and then this line's that 15-minute order block. Hit that 15-minute order block, retrace lower, back down into another order block, and then displace higher. And here is market open. As you can see, we end up manipulating lower, and then we end up forming an SMT here at these lows here, and then we distribute higher at 10 a.m. and then we accumulate within this 10 a.m. fair value gap, take sell side, and then we displace higher. All right, and here, this day was very interesting because we kind of use these macros a lot. Here, let me move my face cam over here because it's kind of in the way. If we look at anytime market opens, the question I'm always asking myself personally is, where's the low resistance liquidity? Where can we possibly manipulate into? Where can we possibly manipulate into? right here. We have low resistance liquidity. We have that 1 hour order block, 1 hour imbalance. And then this green box here is a 15-minute fair value gap that price ended up manipulated into. So I just kind of refined it, but I didn't show it. And here we have a manipulation move lower. We create fair value gap in, fair value gap out. This now becomes a balanced price range. And then, therefore, we end up displacing higher. We end up barely taking short-term buy side, barely purging it, enticing shorts early or longs early into the market on breakout traders, and taking these stops here. And then we end up retracing back down to this order block in this imbalance into this low as well, right around that 950 macro. And then 950 macro, we end up expanding higher. I believe we had 10 a.m. news. So we had 10 a.m. news, and then that just ends up expanding us higher. So all of this is occurring within the 950 macro. 950 macro gives us a retracement, gives us a power, like a little power 3 within that macro retracement, and then we distribute higher. And then these are the new day opening gaps. And then look, like we refer to that one to the tick. We touch it here, almost touch it here, accumulate here, and then look at that. The bodies are still respecting that new day opening gap, and here, boom, we expand higher. All right, and here is the next macro. This didn't register on the chart, but this is the 1050 macro. But basically, look at what price does. This is 1 minute. We end up taking sell side within that 5-minute imbalance at a certain time. Notice how this doesn't happen at anything other than 950 or 1050 within that macro. We end up taking sell side, purging sell side, coming back, and then referring to this mitigation. And then we have, I would call this a breaker. We have the last up close candle, highest body accumulated in there, and then we head towards that buy side liquidity pool. And then this level I'm going to show in the next slide. We have standard deviation. Look at that, perfect respect of that -2 level. And notice how -5 lines up nicely with buy side, so that could have been a target possibly. And then once we take let's take buy side, return to that 15-minute order block or 1 hour order block, I believe. We end up distributing lower, offering fair value in the market at that order block, and then we end up distributing back higher. All right, and here's the annotations of standard deviation on this chart. You have your last manipulation move. I framed it from this low because I feel like this low really started the move. And then, as you see, -2 and -2.5, we end up reversing. And I'm also marking when else is this turning point in the market happening? That 1050 macro. So you have your 1050 macro causing a turning point within the market, a reversal point in the market, and then we end up offering up that order block right there. As you see here, you have your 5-minute breaker. We kind of take buy side standard deviation. We take internal buy side here. You kind of have a 1, 2, 3 drive here, 1, 2, 3 drive there, and then we end up breaking down. High resistance liquidity signatures at the highs, and then we have low resistance liquidity signatures at the high. We kind of have these relative equal lows here. We barely purge these lows, so we might want to make a more meaningful purge on these, as we end up doing. Here's that 5-minute order block within the market, or breaker block, and then we end up having order block retracement here. And I want to, if you map out this in time, I want to see if, yeah, we end up reclaiming this as an order block. So that's kind of the thing I've been trying to backtest recently, is reclaimed order blocks in the market. Anytime on the left side of the curve you've had minor displacement lower, this would originally be a bearish order block. We fail to respect it. This will get reclaimed on the right side of the curve. Same would be kind of maybe here, but it's just not. I would like to see more displacement. So like there, and then I feel like this would be a nice reclaimed order block. So if you can draw those out on the left side of your chart, that could be a reference point. So here, the fair value gaps in, fair value gaps out. So now becomes a balanced price range. That's why we don't really retrace up here, because we have manipulate higher and then we displace lower. We break down. We have a fair value gap within an order block. That would have been a nice entry. Stop at the high, looking for possibly these lows here. And again, where is a turning point within the market happening? 1250. 1250 offers sell side delivery, and then after that we end up offering buy side delivery within the market. We end up taking sell side. That's that 15-minute order block. And look, we have fair value gap in, fair value gap out. I've been really backtesting that lately, and whenever we get reversals into draws on liquidity, we end up getting a signature like this. I've been noting, fair value gap in, fair value gap out. That's why inversion is a good entry, or a possible entry to enter on in a PD array. All right, and here we have a big beefy down close candle on the 5-minute. Anytime we have an order block with no wick, I like to use that as an order block. Map that out. We have change of state delivery. Tap there, and then boom, we end up displacing higher. And look at that level on the 1-minute. Oops. And then here we have that standard deviation. You can project that out. Negative 2.5 ends up making that high right there. And then here we have a swing grade on this model at 50%. We can expect to see consolidation or stop hunt. We don't really get that, but we end up getting the stop hunt here within this model. So it ends up coming quite late. And then look at where silver bullet happens. It's almost like it knows that level, I feel like. We end up getting silver bullet right there. Boom, accumulation higher. Notice negative 1.5 is a possible accumulation area. Negative 2, negative 2.5 is a possible reversal area. And that's exactly what ends up happening here. And we end up taking buy side out here. And notice here, we have that 5-minute order block off of this order block level. Then we come back down, and then we end up tapping into this propulsion block right here. Also right here. Entry, 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 possibly. And then we end up displacing higher. Kind of just slowly, steady, grinding higher towards buy side liquidity here. I didn't really do too many left side annotations on this, but in terms of like a I feel like, yeah, okay. And here's the 15-minute chart. As you see, we retrace right into that 15-minute fair value gap. We didn't really need to retrace into this 15-minute fair value gap because that's a balanced price range here. So we have sell side and buy side delivered. All right, and here's a nice little mock-up of the daily profile. So as we can see, this was a classic buy day when we formed the low of the day in London session. So we formed low of day in London session, and then we displace higher, manipulate right at the 9:30 open into a order block that was formed in the London session. And then we displace higher. 1050 macro offers us a retracement leg into a fair value gap. And then we displace higher. 1250 macro, 1150 macro puts a high of the day. Then we end up having a sell model, sell side delivered. And then at 105, we end up offering buy side after taking a short-term sell side back within this imbalance, back within this order block. And then 135, kind of have like a little retracement here, a little Judas at 130. And then we end up displacing higher, and then we end up taking buy side. So overall, that was the delivery that we had on this day. And yeah, hopefully you guys enjoyed this one. It was kind of just macro. We had a bunch of macros causing turning points within the market.